Hello everyone, very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at a pattern recognition named as matching low. And from name, you can make an informed guess that this formation is going to be a bearish which occurs during a bearish trend. There is a reversal pattern, a bullish reversal pattern after a bearish trend. And as per the name, this this is a two candlestick pattern in which we have identical or similar low levels for the two consecutive candles. So that's how this pattern is formed. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. This is the AUD USD's hourly chart. I will change it to most frequently traded instrument, which is Euro USD. So here we have this Euro USD, and it seems to be quite active, and particularly so after the US data. First it moved on the higher side and those gains were not really sustained, and here we are looking at the Euro USD trading below 1.086. Now as the session is dedicated more to the pattern recognition, let's add it. And you can have these two options, F3 or F4. Let's try this quick search. You type in matching low and here you will have it. All right, so in this case, if we look at these two candles here, you can see that these lows are fairly close to one another, and these two also similar. This is also almost identical. And if we go back in time, so from these examples you can see that whenever two bearish candles in which the closing value is lower than the opening price, if these two candles have the closing value which is almost similar around the same levels, then this matching low pattern is recognized on the chart. And this is more effective when it forms after a bearish trend. If there has been significant move prior to the formation, then it kind of signals a possible reversal. So in this case, yeah, it formed in a sideways manner, sideways environment. So again, the price continued to stay in the same trend for next couple of candle periods, and then reversal happened. If we look at this instance, here the reversal came in, but after price dipping again on the lower side. And let's see some more examples of this. And in this instance also, the price is almost identical for these two, and after that it went on to rise, but this is not a bearish trend. Prior to that, we had this big move on the lower side. After it was simply consolidating and started to gain higher, and these two candles with this closing value being lower than the opening price happened, and after that the momentum picked up again. So you can see that this is a reliable formation, and as is the case with any other indicator or any other formation, not all the time it is going to work. So we always have to figure out the instance where we can safely trade. By safely, I mean we always have to pay attention to the kind of risk which we are taking. The risk and reward always needs to be taken into consideration, and if it is favorable and if we are confident of a trade going in profit with due consideration for possible loss, we can go for this trade after looking at this matching low formation. And as I said, this is more effective when it happens after a significant decline prior to the formation, and that is going to give you more volatile moments also. There will be more volatility, and retracement is also going to bring you good amount of money. So this is how this formation can be traded, can be utilized. This is a simple formation, and as I explained the concept to you, equally easy to understand and equally easy to implement. And in another instance, we can also look at it as a continuation formation. If we see that even after a strong move prior to the formation, the prior move was also upside. Then if on the two consecutive bearish candle we have these matching low, that means even though there was some correction happening, as is the case in this instance, the price pushed back higher again and again. Next time around the similar thing happened. First the price declined, but buying pressure pushed it higher to close it where it had closed in the prior period also. So in two consecutive candles we have this situation in which even after do correction from the higher side, the buying is coming in from the lower side. So you can use it as a continuation formation also. So there is an instance of a bullish reversal after this prior bearish trend, and this is a instance of the bullish continuation pattern. The prior move was bullish and same continued for next many candle periods. So you can utilize it both ways, but in this formation, you can only look to initiate the buy trades, not sell trades. Maybe for that, we will have to wait till we look into the matching high formation. In that case, you will be in a position to initiate the sell trade. Now, for this formation, it is mainly concerned with the buy formation. And one more thing you can add is also after this formation takes shape on the chart, you can pay attention to what happens in the next few candles. In this case, the price continued to dip lower, and then the reversal came in, pushing the price higher. If we look at prior instances, in this we saw this next candle closing on the higher side, but again dipping on the lower side. So maybe if you wait it out and pay attention to the candle formation for next couple of candles, you are likely to have higher probability of getting the trade right. But that's an individual choice. We always have to do the optimization. We have to figure out the ways in which the formation is likely to work for the advantage of our trading system, not the other way around. Because if we get the trade wrong, then we should be losing least amount of money, and if we happen to get it right, then we should be making a lot of money. So that is the whole crux of this trading system and how you can optimize it. And to that purpose, to that effect, we can rely on this particular formation of the two matching lows. Now let us see what we can do in terms of editing. Not much in terms of the input. We can't really edit the input. We can only tinker with the output values. So the input editing has been disabled. This is going to take the two candles of whatever candle period you have assigned, and simply based on the closing values, this formation will take shape on the chart. And in terms of output, you can always go for the color combination of your choice. So that is something you can work with. Let's try it out. This orange color. Styling, two options are there. You can go for the bracketing of the given candle, or you can shade it in the color combination of your choice. I prefer to keep it as a bracket. If you feel that this color combination is too prominent on the chart, you can reduce the prominency by going for a increased transparency, but it is going to make it look less prominent on the chart. Maybe when you shade it in the color of your choice, you can go for a increased transparency, but for bracketing, I think opaqueness looks good enough. Advanced editing options, recalculate on new candle only. So if we go for that, only when the new candle takes into consideration, comes into play and it stabilizes, only then this formation will take shape, and while it is continuing to move, there won't be this pattern recognized. Highlight the time period zone. Only two candles are into consideration, so even if you opt in for this, it is not really going to create much of an impact. Now this show indicator on all the periods option, this is important, because if you want to have it on all the candle periods, whenever you change the chart's candle period, you can have that. So now I'm changing from hourly to 10 minutes, and with this it will shape up on the chart whenever it forms, so regardless of what is the candle period. you will always get to see this formation being recognized on the chart as and when it forms. It doesn't seem to have formed in recent times on the daily time frame. Let me go to lower time frames again. Oh, nothing on the 4 hourly. Oh, here it is on the 4 hourly. Now, if I disable this and go for only the candle period of choice, suppose for example only 4 hourly and 15 minutes, then only on the 4 hour and 15 minute it will be displayed on the chart. So here, but now if I go back to hourly, you see there is no pattern recognition in place as it has been disabled. So if you have different indicator on this hourly time frame, but if you want to have the matching low on the 4 hourly time frame, you can have it, and at the same time make sure that the chart doesn't look too cluttered. So that is the utility of this combination, this particular indicator and its editing option. So I hope you got the point. So try out this combination of matching low and see how it helps you in making your trading system, whatever is your existing trading system. If it can make it more profitable while helping you reduce the losses, nothing better. That is the whole purpose of this presentation, to make you aware of the advantages as well as some limitations of these patterns which keep shaping up on the chart with quite frequency. So all we have to do is look at it and decide whether to go for the trade or whether to simply sit on the sideline. So that is something which we always have to decide whenever the formation appears on the chart. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I would be more than happy to take the discussion forward. So thank you all for joining in. Have a fabulous day ahead, a profitable day ahead.